India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
One of the best-known musicians out of India in over a generation, Zakir Hussain, no more, left us after health complications in the US. The family has now confirmed to CNBC TV18 that he has indeed passed. Really sad news coming in. Of course, there were reports and all kinds of things from last night, but I think this morning officially the family has now confirmed that he is no more. So that is the news which is coming in, and I think we're starting on a very somber note. Really one of the legends, living legends, as far as not just the tabla, but all musical instruments, collaborations with musicians around the world, and someone who really took Indian classical music to the world in more ways than one. So just an amazing musician of our times. I had personally the privilege of watching him here in Mumbai, not very long back, and he was performing, just electrifying. If you guys have seen him play live or, of course, otherwise as well. Nigel, Reema, morning.
Hi. I remember that Bar Taj ad, right, of, Zakir Hussain. It's an irreparable void that he's left in the industry, and everyone, right, who's grown up listening to him.
Well, that's right. And he gave soul to the tabla. He took India to, classical music to the globe as well, and will be missed. Condolences to the family and to the entire fraternity. It's a big, big loss towards the end of 2024.
And young as well, right?
Yes.
Just 73.
Yes.
73. So, that's the somber news, as I said, that we are sort of starting the day with. Now, more on that later, but we got the market to sort of talk about, address, and so let's start there and tell you what you need to know. Remember, the market here this Monday morning is coming after a manic Friday. Friday was, just quite something. We had a big sell-off and then a big recovery as well. But let's just start with, from the first point that you need to know. The big talking point this week is the 25 basis point cut, which is priced in by markets as far as the FOMC is concerned. It's almost fully priced in. The decision will be out on Wednesday. The market here, as always, will react to Asia, will react to it on Thursday morning. That's point number one. It's all largely, as I said, in the price, but the change can come as far as projections, Fed projections are concerned, as far as the economic growth, inflation, unemployment rate, etc. is concerned. And there is scope for significant changes to those projections. Guess what's happened to the 10-year yield? It went up 24 basis points last week. The last Friday's change was 7 basis points, and Friday to Friday, we've seen a 24 basis point move. It's the biggest weekly rise since October of 2023. So what's happening, of course, is that the dovish Fed is hurting bonds. But at the same time, at some point in time, we don't know when. It doesn't matter till it starts to matter. Yields get to a point where they start to actually hurt stocks as well. We're not probably there yet, but we'll have to watch this very, very carefully. Remember, US 10-year real yields are already above that sort of, traditionally what is seen as a danger zone, 2% levels. We're already above that at this point in time. At the same time, equity markets are doing very well. The S&P on Friday was unchanged. Nasdaq was higher. The Russell was slightly lower. But the implied volatility in the S&P is nearly at 2024 lows. Stock markets are cruising along nicely, but at the same time, yields are also moving up as well. The other factor, of course, is the dollar. We got a one-week reprieve for the dollar. We fell from almost 107 levels to 106, and we're back at almost about 107 odd levels or so, just under it as far as that is concerned. Now, just to sort of tie up the levels here, the Nifty Bank fell to their respective 20-day moving averages and then saw very strong buying. which completely reversed and then added a lot more to a Friday session. And it was a classic case. I mean, actually, if you just look at the daily charts, almost exactly a touch at the 20-day. And then from there, a significant bounce is what we really saw. And I think that's the reason why I think maybe there is more here, at least on the upside. There is seasonality, etc. as well. And you don't want to stand in the way of, strong sort of seasonality, which is essentially positive for this time of the year for equity markets around the world. So can we build on what we saw? I mean, the sell-off did not last, but the bounce was significant. So the levels then come into focus. The support first, it comes in around the 24,400 levels on the downside. But more importantly, on the upside, I mean, we need to take out 24,770 and 24,850 levels. So that's a zone to take out. And then we should eventually head, and it's not very far away, to 25,125 levels, which is nothing but the 61.8% retracement of the entire fall from the all-time highs to the recent lows. Nifty Bank, same thing. We held the key averages, which is the 20-day moving average, and then we saw a very sharp bounce back. Immediate resistance for the Nifty Bank stands at 53,888 to 54,467. This is the zone that the Nifty Bank needs to head to. And the near-term support basically comes in at about 53,350. I would say the skew should be positive as we start this week for a number of reasons that I already outlined. The GIFT Nifty will come up on your screen. It should give you an indication of how we're likely to start. Okay, that's interesting. We're around 50, but that does give you a sort of, it does give you an optionality. You're not starting 50 higher, 100 points higher, and then you're left chasing. At some point, you maybe start to get a bit of a buy on dips kind of price action. Najib.
Well, that's right. It appears the markets have gone back into that buy on dips mode, and it appears that it wants to test higher levels as well. In Friday's trading session, it was a classical case, right? We went down to around the 20 DMA. We conquered that. In fact, then we took out the 50 DMA as well. So the Nifty, the lows on Friday, it coincides with the 20 as well as the 50 DMA. And we managed to close above both those levels on a closing basis. What's heartening to see is the flows. The FIs are back and they're showing us the money now. After 2 consecutive months of selling, the flows so far have been quite good. It'll be a little higher than this because even in Friday's trading session, they pumped in close to around 2,000 crores. So the FI flows have turned around. A few factors have played out. The state elections have gone in favor. You have a couple of large trades as well that's taken place. And the MSCI rebal as well. That's something that could have played out. And we know that the domestic flows have been good. So the SIP contribution, well, that continues at around 25,000 crores odd. So liquidity has turned positive both on the FIs as well as the domestic funds, which is good news for the markets. What happened on Friday? Well, the cash market buying was there from the FIs. And if you look at the future space, well, there was a bit of short covering that played out both on the Nifty as well as in the Nifty Bank. And that perfectly ties in what the FIs did. So they covered some short positions. They added some long positions. Overall, they continue to remain net short with close to around 59% of their positions on the short side. But in fact, we did see a bit of a short covering bounce that did play out, which aided that up more. So in terms of levels, the downside, I've been mentioning this level of from 24,400. That's important. Friday the 13th didn't really play out for the bears because we did see a good bounce of those levels. So going by the options data, you had a couple of strikes that were active. 24,400 is important on the downside. And going by the options data itself, since the 24,800 call has been fairly active, that level of around 24,950 to around 25,000, that will become a bit of a resistance mark in the near term. It's a stock-specific market, so I'm looking at 3 stocks out here. One is Page Industries. The stock moved higher in Friday's trading session, and it's bounced nicely. In the month of November, it went to those highs, and then, in fact, it corrected a little bit. But that dip has got bought into, and this move came on very, very high volumes. Just a note on Page Industries, though the stock is moving very, very well, it's still 10% away from the highs that we saw in October 2022. So keep an eye out on that one. The move came on high volumes. There could be some shorts in the system as well. So Page Industries is one. The other one is KPR Mills. That stock made a fresh 52-week high. You like to be with stocks that are making fresh highs. And there was a good amount of delivery-based buying. So I'll keep an eye out on that one. And finally, some of these stocks, there is that restricted sale of shares since they recently listed. Well, the one that I'm looking at is Travenues Tech. That one, in fact, you'll have a large proportion of the book that was locked in, or a large part of the shareholding that was locked in, that becomes eligible for sale. And since it's a rather large sum, I'll keep an eye out on this one as well. So 3 stocks, Page, KPR Mills, as well as Travenues Tech.
Okay, thank you very much for that. By the way, data's coming out of China where the November retail sales have missed street expectations. They've gone up by 3%, lower than expectations of 4.6%. and much lower than the October number of 5.8%. Shanghai is the one we're talking about, where the economic data continues to remain very disappointing. Even last week, the Chinese markets were under pressure for the entire week, as the big stimulus bazooka is still not coming. And now experts are pointing out that the next trigger in terms of potential stimulus perhaps will come only in March when the NPC meets again. That's the picture across Asia. Hang Seng right now is just flat with a negative bias. Taiwan is the one which is up nearly about 0.8%. Let's get to the equity views then. Chetan Seth of Nomura says Asia ex-Japan equities, they've got a cautious stance going into 2025 and H1 of 2025 given the looming headwinds from US trade and policy uncertainty. Monetary policies that are now less supportive than hitherto, with likely fewer Fed rate cuts ahead. A stronger US dollar and China's restraint on fiscal stimulus, he says, these are the risks that will present a ceiling for Asia ex-Japan stock in the early part of 2025. He adds, the main focus of the markets this week will be the December FOMC meet, where the markets widely expect a 25 basis points rate cut. And thus, they think the dot plot will be of particular focus for the market.